After 6 years and more than $250 million, the ASX has abandoned its ambitious plan to move all share trading into blockchain. That's a similar platform used to trade cryptocurrency, including Bitcoin. Business editor Ross Greenwood joins me, and this is a massive climb down from the ASX. Why?
It really is, and it's been technology they've been trying to implement for all of this time. They've had troubles, technical troubles along the way, and even though they say it is delayed at this stage, effectively it seems to be dead in the water. The reason for this is effectively it was an ambitious project to update what is their current system, which is known as CHESS. So when people buy and sell shares, effectively going through that to basically electronically record those transactions. What they were wanting to do was to come to the latest of technology, which was blockchain, which, as you point out, is exactly the same technology that's used for the transactions of Bitcoin and other cryptocurrencies, seem to be highly secure, but there were problems all along. The system was supposed to start last year, 2021, but there was simply delays after delays. The former chief executive, Dominic Stevens, has left the ASX. Today there was a statement from the ASX itself, and you can see here exactly what they've said. The report estimates now the application software, this is after they'd had Accenture come in and do a report about this, that they're only 63% complete, i.e. delivered and mostly tested when considering both functional and non-functional requirements and the timeline to completion. Now, from this, the regulatory bodies that oversee the ASX, which is the Reserve Bank and ASIC, the corporate regulator, today have put out a joint statement. In that, Joe Longo, the chair of the Australian Securities and Investment Commission, says the independent report has found significant gaps and deficiencies in ASX's program delivery capabilities, and that there are significant challenges in the design technology. So that, if you like, is a fairly damning indictment of this project to change the whole way in which shares were traded in Australia from the regulator himself.
Wow, a waste of $250 million. Sounds like they spend all that money on tests and reports and consultants. So what does the ASX do now? After all, wasn't the current system already outdated?
See, there is a fundamental problem also, because you may recall that there'd been outages of the ASX that have been heavily criticised by regulators previously. And the answer to that was to move on to this new blockchain system. So therefore, you raise questions about the existing CHESS platform, which has been reliable, but seriously has shown its age over the past few years. So today, the chair of the ASX has come out with a statement, this being Helen Lofthouse, and basically says, in recent years, we've increased our investment in the capacity and resilience of the existing system and are confident it will continue to serve the Australian marketplace well into the future. But as I say, there have been outages. They're significant when your securities exchange does go down, and no doubt regulators and market participants will be watching that closely. But that is a big climb down from the technology and certainly the advancement that they were seeking.
Ross, there's a whole lot of corporate speak in those statements. So cut through I don't want to say crap here, but I can't find another word right now. What happens? I mean, it's outdated. Does this mean the ASX is vulnerable, and it's going to take years to find something else now?
Yeah, potentially. That is exactly it. They've either got to buy something off the shelf from somewhere else, which is going to cost them money anyway. But the fact that they've tried to do and build this themselves and it's failed is a significant problem. And it's going to mean that the system, which had been having creaks, the current system, is going to continue to have problems into the future. In other words, this project that they'd had, it's stuffed up.
It failed. OK, let's get to some happier news. Online travel agent Webjet says today its bookings are back to pre-pandemic levels.
Yeah, so this is really interesting, isn't it? Because there's fewer flights. You could even see from the data that came out yesterday that the level of inbound tourists to Australia, or travellers to Australia, is just over half what it was pre-pandemic. And yet today, Webjet says in its results that the bookings, well, they're back to 101% of pre-pandemic levels. In fact, on a year ago, they're up by 137%, you can see here. Profit, well, they're back to profit. They had made a $60 million loss in the same period period last year. And also you can see the revenues have taken off. So just interesting note, still not paying dividends. They say they've got plenty of cash in the bank, but it is one of these points whereby a company such as Webjet clearly needs travellers through the door, just as Qantas or Flight Centre, any of these companies need travellers coming through the door in order for their businesses to succeed.
Yeah, even though travel is way more expensive than we're used to at the moment.